Thanks, Chrissy, and thank you everyone for taking the time to hear the Horizon story. Our standard disclaimer, this presentation, as Chrissy mentioned, is on the ASX and on our website at www.horizonminerals.com.au, ticker code HRZ. So we're an emerging gold explorer, developer, producer. Why gold? Really, because in our view, gold is an underlying source of value, and we see the gold price consensus around the $2,000 to $2,500 per ounce Australian, which is giving us good margins across Western Australia and the greater Australian economy. Why the Western Australian goldfields? Well, I think you've probably heard quite a bit about why the Western Australian goldfields. I think a number of presenters over the last couple of days have demonstrated the fact that this part of the world is world class. It's not just gold, it's a minerals province, and it has a lot more to give yet. Some would say it's been drilled out, it's a bit tired. I think what you've heard over the last couple of days and what you'll see in the next 20 minutes will demonstrate that it isn't old, it isn't tired, it has an enormous amount of potential yet to be unlocked, and we're very happy to be in this part of the world. For us, it's also where we have raised our families, it's where we've started our careers. We know how to do business there, we know gold, and we know how to get things done in and around the Kalgoorlie region. So Horizon's sitting around 1 million ounces of JORC resource. 70% of that is in the lower risk measured and indicated categories. That 1 million ounces doesn't include our recent acquisitions, which I'll mention through the presentation. For us, 1,100 square kilometres, all within 75 kilometre radius of Kalgoorlie and our proposed centralised processing plant at Barara. It's one of the largest, strategic land holdings outside of the majors. We've got the big boys looking over the fence, and we've got a lot of near-sized companies that we want to have conversations with over the next 6 to 12 months. I don't think I've been to a conference for a while with the words fully funded being mentioned nearly every presentation, which is, I think, great for the resources sector. It's great for the state, and it's great for the country to be out there looking for new things, looking for replacement of depleted reserves and resources across the country. It's a fantastic, vibrant sector at the moment. It comes with its challenges, and you've probably heard the other thing which everyone's talking about, which is the bloody assay labs are taking too long to get their assays back to us. So as for us, we would typically get 2 weeks turnaround. We're averaging around 6. At worst, it was about 8 weeks to get our assays back. So you can see the GOs lying awake at night staring at the roof, going, please, I like the look of this stuff, but I just have to wait for the numbers. That is a part of the fact that our industry is going gangbusters and the drill rigs are out and turning for the betterment of the country. We're fully funded. That's the next time you hear that. So we have 12.5 million in cash and 5 million in listed investments. Those investments give our shareholders exposure to copper, silver, zinc, gold in other jurisdictions, but our core focus is gold, and our core region of interest is the WA goldfields. We've had 70,000 metres planned since middle of last year. A lot of the reserve conversion drilling is completed. We are now in new discovery and project generation mode, and we're pretty excited about what we've seen to date. Very quickly on the corporate snapshot, market cap around 75 million today. As I said, 12.5 million cash, 5.5 million in listed investments, giving our shareholders exposure to other commodities and other regions. Team, I think, is very important. Collectively, about 150 years of collective experience in the WA goldfields. Ashok, corporate finance guy, I'm sure many of you know. Ashok Parekh. Peter Bilby is a mining engineer, and he's also chair of Independence Group and Adriatic Metals. Great to have him on our board. Metallurgist by background myself, underground mining engineer. Grant, Julian, corporate finance, and Dave, our geo, heading the discovery team. So we've all been out there. We've all raised our kids. We've all worked there, built our careers out there. This is not our first rodeo. As I said, over 1 million ounces of gold at the moment. 6 key projects all around Cal. You can see on the map there, essentially surrounding the super pit, which is a pretty small hole in the ground, but we've got some fantastic and strategic country in and around the super pit, but also out on major shear zones to both the east and the west. Strategically, and probably I'll spend a bit of time on this slide, where are we going? Where are we taking this company? So our aim is to build a minimum 5 to 7 year mine plan underpinned by a baseload feed, which is the Barara, 450,000 ounce Barara gold project, you can see there. So that is typically running at about 1 million tonne per annum. And we have our satellite, open cut and underground projects all within relatively easy trucking distance within 75 k's to come to a centralised processing plant. Where do you put the mill? You put the mill right next to the baseload feedstock, which is Barara. That is 10 minutes drive out of Kalgoorlie. All of our staff go home every night to their families. We're on grid power, we have water, we have approvals, and we're working through that feasibility study through to a development decision in December of this year. Run rate initially around the 70 to 80,000 ounces per annum. We see organically we can grow that to that number that everyone wants to hear, that plus 100. We aren't there yet, but the drill bits are turning, and we see organic growth through to that magical 100,000 ounce per annum mark. The mill is designed, costed. It's a 1.5 million tonne per annum free milling conventional circuit, sitting right next to the baseload feed. Open cut underground satellites coming in at 2 gram open cuts typically, and 4.5 to 5 gram underground operations. And we would see ourselves working alongside Barara with 1 open cut satellite operating and 1 underground operating. We're fortunate with our location that we can actually trial ore bodies. And when we merged with McPherson's 2 years ago that brought the Barara ore body into the camp, we wanted to understand, is this thing going to give me 1 million tonne per annum, day in, day out, at 1.2 to 1.3 grams a tonne? So we decided to test that. We've mined 3 pits, averaging 100,000 tonnes, overall 300,000 tonnes, and we have a toll mill business sitting 7 kilometres to our west. And so we put that ore through the Lakewood toll mill, and we tested the ore geologically, and we tested it metallurgically, and we understood a lot more about how to mine this thing in a larger scale. So as a metallurgist, I went to the geos and said, you do your technical modelling and you tell me what the grade is, and then I'll go and mine it and put it through the mill and I'll tell you what the grade really is. For them, they were pretty happy because the grade reconciled very well against the geological models, particularly the grade control models. And that's given us the confidence, and it's really de-risked that baseload feed, which really has to deliver that 1 million tonne a year at that grade to maintain its margin. Very happy with the metallurgy. We got 40 to 45% gravity recovery, overall recovery in the 94s, very low strip ratio, open cut operation, and so close to Cal. It's a fantastic address. So we've significantly de-risked Barara, and that's just the first 1.5 kilometres of it. We own 25 kilometres of strike along the Barara Shear, and that is where the drill rigs are right now. Aircore, RC, and eventually we'll have Diamond coming in there for some structural analysis work. So we're running from Canalnabel in the north down to Golden Ridge in the south. We'll have at least 13,000 metres drilled through here. We've already done 4 to 5. Where are the assays? In the lab, waiting for processing. The next 4 or 5 slides I won't talk to in a lot of detail given time, but we have 6 core projects, 1 million tonne from Barara, 500,000 tonne per annum coming from our satellites, open pit and underground. Rose Hill, fantastic numbers, is a box cut open pit followed by a portal and decline development into the underground resource. Binduli, open pit, undercover. Why is it still there? Why hasn't it been found before? It sits under 20, 25 metres of cover. Modern technology has enabled it. It's 20 k's from Barara and 10 kilometres from Kalgoorlie, and a relatively new discovery. Teal, we've mined here before. We mined here, we made money, we used the toll mills. We don't want to use the toll mills forever because they cost a fortune and you're eroding margin. When you have scale, the economics tell you to get your own mill up and away and capture that margin for your own shareholders. We want more Teals, and we're having some great success to the south. Recent acquisition, Kalpini, JORC 2004 resource after depletion of around 210,000 ounces. I don't believe it's that big. We've drilled it out, the assays are in the lab, and we will be publishing a JORC 2012 updated resource with our own parameters in the next couple of months. On resources, we have released 2. We have 4 to go in the next 4 to 6 weeks, and we have 6 maiden reserves to put to the market in the next 2.5 to 3 months. Kalpini will feature in our production profile, in my view, between years 5 to 7. Cannon, the most recent acquisition, is essentially a walk-up underground opportunity. It has around 20-odd thousand ounces sitting in a 4-level development from the bottom of the existing pit. We've learnt a lot about the geology, as did Southern Gold, the previous developer with Westgold. We understand the geology, and we've got a lot of confidence that they have done a fantastic model. We're not putting any more drilling in here. We're just going to refresh costs and revenues and republish the Cannon Reserve in fairly short order over the next couple of months. This is a year one project for us. We see enormous opportunity below the existing resource envelope, and we see a lot of opportunity along strike along the Cannon Shear. With the acquisition, we got some property up at Glandore that really is sort of more grassroots and brownfields, and we've got some ground intermingled with Alan Kelly's. I've heard Alan Kelly's presentation right next to Silver Lake. So at some point in time, Luke Tonkin's going to give me a phone call. But at the end of the day, for us, we're going to go and do it some justice and put some drill holes into the Banded Iron Formation, particularly south of the Mount Belchers area, which is quite exciting. So this is another reason perhaps why we're a little bit unique. We entered a joint venture with a company called Almanex. It's essentially run by the GBF underground mining contractor team. And we want to make a development decision on Penny's Find in the September quarter. We want to be cutting the portal and be developing in the December quarter of this year. And we want to be pouring gold through the Lakewood Toll Mill in the March quarter. So we have a fully approved underground. We have a licensed toll milling agreement with Lakewood, and we've used them 3 or 4 times before. And we see Penny's Find as a source of cash. So there's not too many companies out there, I don't believe, that are potentially in mine development and in mill construction and in production at the same time. Because of our location and the deal structures we have in place, we can do those. And this can be a source of equity. This can be making as much money as we possibly can to contribute to that capital component for a new mill build. So you will hear more about Penny's Find in the next coming months, including the development decision with our JV partners to get this thing going. After 20-odd thousand metres of reserve conversion drilling that we needed for the feasibility study, we're now in new discovery mode. And the geos are pretty happy about it as well. So we've taken 12 to 18 months to pull together a large package on major geological structures very, very close to Kalgoorlie. We've done the technical work, we've done the geochem, we've done the geophys. It's now time for the drill rigs, and they are out there. Aircore, RC, Diamond, and we'll be putting, we've got another 35,000 metres to go, and about 20,000 metres that's in the lab is awaiting processing, release, and news flow out to market. So very excited about the areas. On the left-hand side of the page, you can see the Mount Ida fault. Essentially untested in a lot of areas. It's the next major shear zone. Everyone's talked the Golden Mile Dolerite, followed by the Zulika Shear, then the Cunnahnulling Shear. This is the next one to the west, and we are going to get in there and have a real crack at it. We have the money to do it, we have the targets defined, and we're going to hit the ground running. Are we the natural owner in the future? Maybe, maybe not, but let's create value and then talk to the area, the companies that are potentially more natural owners to us as we move our business to the east of Cal. Is there gold still left in Kalgoorlie? Yep, demonstrated that at Windanya. The first drill hole hit 2 metres at 27 from 35 metres depth, and we're following that up immediately as we would through the Windanya and the Baden Powell areas. Again, we're very cognizant about natural ownership. Are we really the natural owners of this area, which is about 55 kilometres north of Kalgoorlie? Maybe, maybe not. But there's a lot of players around that we'll have conversations with. And because we've been out there for so long, we know pretty much everybody. And we're happy to talk on that front. Divestment is something we've done. We've recently divested our royalties for $7 million in cash. Keep that cash and put it towards our CapEx. I'm just going to digress briefly about our non-gold assets. I think being in Queensland, we have a vanadium oxide deposit sitting in Queensland. It's been in the stable of Intamin, then Horizon, for about 10 or 12 years. We have a private company called Richmond Vanadium Technology who have spent $6 million to earn in to that project. It sits 400 kilometres inland from Townsville, in between Mount Isa and Townsville on the major highway. It's called the Richmond Julia Creek Vanadium Deposit. What's different about it? It's oxide. It's 5 metres below the surface. and you can essentially strip mine the oxide out, upgrade the concentrate to around the 2% mark, and then move it on in bulk for electrolyte, for the new age redox battery market, and obviously the steel market that still has a significant component of vanadium in steel for its lightness and for its flexibility. The PFS has been completed. It pumps out 13,000 tonnes per annum of vanadium pentoxide at good recovery. Importantly, because it is oxide, the OPEX and the mining side is very cheap, and the CAPEX, you don't essentially have to build a steel mill to get the vanadium out. It's essentially a salt leaching process, a salt roasting process, beg pardon, and the CAPEX around US 160 million. So we're updating that. For those of you who probably watch the vanadium market, you've seen the vanadium price tank a little bit down into the sixes. It's now back at about $8.40 from memory, the last time I looked. So if you change the price used in the PFS, which we're doing that with our offtake partner discussions now, we have a potentially US $300 to $400 million project sitting in northwest Queensland or north central Queensland. We'll be a 25% owner of it. What do we do with this project? As we build our gold business up, we have options, and we'll explore all those options, whether it stays in the stable, whether it doesn't. You know, there's plenty of upside. First things first, get our offtakes discussed, and then refresh that PFS and move it to bankable across the next 6 to 9 months. We have a 20 million ounce silver deposit sitting just next to Barara out of Kalgoorlie. It has high-grade core components to it. It runs about 950 grams a tonne silver and runs about 13.5% zinc. What do we do with that? Well, we're focusing on building our gold business. So we've decided to retain it for now. We're dusting off the old bankable feasibility study. We're looking at offtake because there is a much higher level of interest now in concentrate offtake that we've seen in a number of presentations. People actually want a silver con, a zinc con, and potentially a gold con that can come from this ore body. So we're going to retain it. We have a separate dedicated team that's not getting us distracted to focus just on the silver zinc project, and we'll see how that unfolds in the next 6 to 9 months. A lot of upside in our non-gold as well as our investments in other companies which give our shareholders exposure. Very busy 6 months ahead. Our timeline, I think, has slipped a little bit, really on the back of assays, and I think as an industry, everyone needs to be a little bit patient because things are taking longer. I think in the future we're going to have to face labour risk and the lack of. We're going to have to look at challenges around construction risk, development risk and timing, and we're going to have to be very careful that we manage that as best as we can, and as an industry we're very good at adapting and very good at managing through our challenges, but a great environment. I won't go in too much detail, but the people, the assets, the plan, and now the execution is what we've got to look forward to, and the next 6 months for us is going to be very exciting as we move into that development decision. And everyone likes these slides. And so everyone puts theirs up. We're sitting around the $55 EV per resource ounce, market cap 75, share price 13 cents. We're on what we believe is a very strong trajectory forward. We would like to see that share price appreciation, and then we'd like to build our mill, then we'd like to generate cash, and then we'd like to use the D word, which probably haven't heard as much as we have in a lot of conferences, and that is getting dividends back to shareholders, because that's who we work for. Thanks very much.
Paul Bennett, thank you very much from Horizon. And that is available on your website, isn't it? That presentation. So I've seen a couple of you taking pics, but you can always get the whole thing on the website as well if you like. A simple intro coming up next. Again, we're relying on the marvels of modern technology, looking towards Shane, our techno guru at the back there. Alcor is waiting online to present remotely. The company may be on the cusp of turning aluminium smelter waste into treasure after producing aluminium fluoride samples from wastewater, which is known as dross. Could they be a value add to our portfolios? Let's find out. Dr. Mark Cooksey is the CEO of Alcor. He joined in February 2020. He has extensive experience in developing new processes in the minerals industry, particularly in the aluminium value add chain. Please make him welcome.
Australian aluminium smelters are 100% reliant on imports of aluminium fluoride. Supply disruptions could lead to the end of aluminium smelting in Australia.